Hey, it's Blake here, Forex Money Flipper with 10 Tiles Trading. So I've been trading the Nikkei 225 for the last several days or whatever, a few days. But so I'm trading the Nikkei and the US 30, and the reason I'm doing that is because my broker, which is the Fivers, is actually got a nice spread, and also the commissions are fairly low for the Nikkei and the USD. So that's the Fivers. As you know that I use that company. I don't have their website open right now, but anyways, the purpose of this video is to show you what I'm looking at in terms of the interest rates. In terms of I'm back testing this. June 2014. Okay, so I'm going back and I'm looking at what's going on in the fundamentals in Japan, right? What's going on with interest rates, and with the interest rates, you can tell a lot. You can tell what's going on with the currency. You can tell what's going on with the stocks in general way. And so what I mean by that is when the interest rates start coming down here from this high, right? Because if you look, they were sky high. They were like 9. The interest rate was like 9% right here or something like that. Yeah, about 9%, 8.9, something like that. All right, but the interest rate starts coming down, and basically interest rate starts coming down. Okay, so what happens? Okay, so now when the interest rates are high, people want to hold that currency. They want to hold the yen because they're making money on the yen. But when interest rates are coming down, they want to sell the yen and they want to put their money in something else. What do they put their money into? Stocks. They put their money into stocks. Okay, and so that's why you see when the interest rates are coming down, stocks are going up, right? So if you know the interest rates are headed down and they're headed down, and if you knew that they were headed down to some low point, right, you could just buy all the way up, right? Like let's say you're working and you have money each month, you get paid every 2 weeks, whatever. You can just keep putting your money in the Nikkei all the way until they start until they start raising interest rates again. Why? Well, what happens is when they start raising interest rates, okay. So we said that when they lower them, people are selling the yen and they're buying stocks. So when they raise interest rates, they start buying the yen, right? Because when the low interest rates are going down, they're getting less money for having holding yen, right? And the longer they wait, you know, it's like they're missing out on this opportunity here. You see what I'm saying? So even if they kept holding the yen, they're still going to be making interest, right? They're still going to be making like 5% here, which is still decent. You know, it's not great, but it's decent. But as soon as it starts dropping down into here, right? Now you're getting to like 3%, 2%, whatever. Okay, now people are like, okay, well, I'm not getting the return. I get a much higher return on stocks, and so that's why you see like pretty much like it's just like parabolic. This whole move is parabolic, right? So as this is going down, they're basically selling the yen and they're putting their money in something else, right? Okay, so then because they're not making money, they're making the further down the interest rates go, the less money they're making on the yen or whatever country it is, whatever currency it is, and they want to put their money in the stock because they know the stock's going up. They know they're going to make a whole lot more money in stocks probably, So, but when interest rates start going up, okay, that's when they want to start buying the yen again, right? So what happens when they buy the yen? Okay, well, in order to buy the yen, they got to take their money out of somewhere, right? So if they have their money in stocks, they're going to take their money out of stocks and they're going to buy the yen, right? And they're going to hold it, until it starts coming down or until it gets to a low enough point to where they're like, okay, and now here's kind of the problem with what happened. Like, interest rates are going down, they're dropping down to the lowest that they've been in 30 years or something like that by the time you get to here. And so it's like you would expect the Nikkei to start going up, but the Nikkei keeps going down for a while. Why is that? Well, I don't really know. I'm not that familiar with Japan, but I just wanted to show you in a general way how these interest rates affect the dollar. And we're gonna, or the currency and the stock market index for that country. Okay, so now we're gonna zoom in and we're gonna look to see if we can see correlation of recent. So we have interest rates dropping here. Okay, this you would expect to go up now, right? But it doesn't. It keeps going down for a while. And what happens? Okay, well, you know, interest rates were at zero, at zero, which is horrible, obviously. Okay, and then they went up to 0.5. So I don't know. That's really not even worth like getting out of bed for, right? Nevertheless, people thought probably that, you know, maybe this was going to go higher, but you know, but in the news, maybe not. If you're listening to the news and you're following the I know we have the Fed here in the United States. I'm not sure the Bank of Japan, I guess, would be what they're following there, and but you know, maybe they're thinking, okay, well, maybe it's going to go higher, so I'll pull more money out of stocks, and then I'll put more money in the yen or whatever, and so you see the stocks going down here. Well, when when they started going back down, people were like, well, that's not good. I don't want, you know, I don't want to go negative. So then what happened? They pull their money out of the yen, and they start putting their money into the Nikkei, and then Nikkei just goes to make almost all-time high. You know, because Japan now has negative interest rates right now. So I know it's like it's hindsight as far as my back testing goes and stuff like that, because I am, you know, I'm seeing like what happened with price and everything like that. But you know, you have to have a fundamental a basis for your trading, and that includes your back testing as well. So it is a little bit cheating to kind of know that it does go up and stuff, but you still have to have skill getting in there. But in real time, if you know the interest rates are going lower, you can expect that stock market to be going up. You know, in terms of people pulling their money out of that currency for that country, and then basically you know, buying up stocks and other investments, right? Such as gold and I don't know if oil really works that way, but you know, you think of precious metals and stuff, and people buy those, you know, because you think of like the country's currency is usually like a safe haven, right? So they'll put their money in there, especially when interest rates are high. But like I said, we're just looking at interest rates, and when interest rates get lower, then that's when you expect stocks to go up. And so instead of, you know, repeating myself here, but yo, I'm just looking for 2014, because I'm back testing this. January 2014 should be right here. But you know, and the last thing I'll say about this is right now, because I'm gonna keep these videos short. I will start making some shorter videos. But the last thing I want to say about this is, like, you know, if you want to go back and look at the news articles and stuff like that from this time, you could do that. Like, you know, however, I'm sure they've got sure there's a way you can find like old news articles, right? So you can look those up and see what the sentiment was at this time, right? It's like if you're back testing this right here, you know, you could just straight up Google you know, basically some economic news at that time, right? So for even for that day or whatever, just to get the feel for, you can say interest rates January 2014 Japan yen or whatever you want to type in, search there, just to get a feel for what's going on. Because at this time, you know, there's lots of news coming out, lots of people talking, lots of, you know, things going on in the financial world, that in real time, you know, it's going to be easier to track those. Obviously, in hindsight, it's going to be a little bit, you have to go back and do more research and kind of weed through it, and you don't have that same kind of sentiment, you know, that kind of underlying tone of that economy, right? Especially if you live there, you know. But you know, that's even a greater advantage. Or if you live around the financial hubbub, or you work in that industry and stuff like that, you're going to have a better advantage. You're going to have a feel for it, and that's always true, no matter what currency you're trading, no matter what country you're trading in. But yeah, so this is the general idea. I just want to make this video to show you about the interest rates, and you know, kind of my idea about back testing and stuff like that. But I want to keep this video to around 10 minutes. So thank you so much for watching. Please like, comment, subscribe, and share. Thanks so much, and have a great day.